everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and here are 4 important things to pay attention to for the upcoming trading week. Now, before we dive into that, let's talk about what happened last week. It was very exciting. We had some nice down days, some huge up days, and finishing not so strong going into Friday's close. Well, Wednesday was really all about Jerome Powell and making comments about how the economy is showing some statistical improvement and how inflation is starting to decline. That gave markets hope that the Fed may not raise as aggressively going forward and maybe even see a rate pauses here in 2023. Now, we're not sure 100% what's going to happen this week in our markets, but I can tell you exactly what's going to happen with regards to information that will be released, giving you times and dates. So let's start things off with our typical earnings calendar. I know a lot of you look forward to the earnings calendar. Well, there's 369 companies reporting this week, so it's going to be a rather light one. Now, on Tuesday is when things start. Monday's got nothing going on, but Tuesday you got Casey's General Store, AutoZone, Dave & Buster's, and Toll Brothers. Now, I am particularly interested in the Toll Brothers numbers because what we're seeing is a lot of interest in real estate. Are home builders going to continue building? What do their earnings look like? Because if we are in fact seeing a housing slowdown, or as many feel, the housing bubble popping, then these numbers might not look so good for Toll Brothers. So we'll have to wait and see what their earnings look like on Tuesday. But then let's jump even deeper into it and go into Wednesday. Wednesday, you've only got a couple of names. You've got GameStop, which has been that meme stock Reddit short squeeze play out there for the longest time. It's really just been sideways for months now. And then you have Campbell's Soup. Now, probably the busiest day of the week for earnings calendar is going to be on Thursday, where you've got Lululemon, Broadcom, Costco, Oracle, Ciena, and DocuSign. And that, my friends, is it. There's really no more earnings. And again, there's 369 of them, but I just cherry picked some of the bigger names, so something to keep an eye on. Now, let's focus on the bigger issues. Obviously, earnings are important, but they're not really the market driver. What is the market driver are central banks, and it's not just the United States, it's central banks around the world. So this week, we don't have U.S. central banks. As you guys all know, December 14th will be when our FOMC meets, and right now expectations are they're going to raise 50 basis points. But what is everybody else doing? Because maybe the banks that are making their announcements before us, that might sway what our Federal Reserve is going to do. So let's take a peek at other central banks making announcements this week, and we have 2 of them. The first one is down in the Southern Hemisphere, the Reserve Bank of Australia. On Monday at 10:30 p.m. Eastern Standard Time, they will be making their rate announcement, and at this point, they're expected to increase 25 basis points from 2.85% to 3.1%. Oh, but wait, there's more. Our neighbors to the north are also reporting their rate announcement on Wednesday at 10 a.m. Eastern Standard Time, and that is expected to go up 25 basis points as well, from 3.75% all the way up to 4%. Now remember, this is really the battle that's going on right now between central banks. They're raising rates strategically to help out their economies, to stave off inflation, but at some point, that tact is going to change. They may have to stop raising because raising rates too much may impact their economy in a negative way. So it's walking this fine line that not only the U.S. is doing, but Europe, UK, you got Canada, Australia, all these central banks right now are playing this little chess game, saying, let's move this pawn forward and see how everything reacts. It will be a very interesting week with regards to those currencies. And if you are trading the Australian dollar or the Canadian dollar, you may have some very wild swings as well. All right, now let's talk about the last piece, which is going to be consumption. On Wednesday, Jerome Powell cited the core PCE price index from an inflationary perspective. And he said, we're looking at 0.5% was the previous reading for core PCE. And expectations were that we're going to get a 0.3%, meaning a further decline in the core PCE price index. Now, what does that mean? It basically means that prices or inflation is starting to slow down a little bit based off of month-over-month data. It's still increasing, but not as rapidly as it was. So 0.3 was the expectation, and all of a sudden the announcement came out and said 0.2%, which is even better than expected. This sent the traders just flocking to risk-on assets, buying into equities with the thought that maybe in the near future the Fed will start to slow down its raising rate policy. Now, what's going to happen this week? Well, we don't have core PCE because we had that last week. What we are going to get is a number that is very important. That is called the Producer Price Index, or PPI. That's happening Friday at 8:30 a.m. Eastern Standard Time to round out our trading week. And this basically says, what does it cost producers to manufacture a basket of goods and services? As you can see on the right-hand side there, the last 2 blue bars have been declining. Now, this is a very good sign because if we see prices declining here, it's a sign that inflation, or the cost for these producers to make these goods and services, is declining. And if that continues, that will reflect in prices down the road. Those savings may pass on to consumers. And remember, we are a consumer-driven economy. It's all around supply and demand, whether you're manufacturing goods and services, whether you're selling homes, or whether you're actually out there every day just trading stocks, bonds, options, and futures. It's all about supply and demand. And if you would like to register for a free class to learn how supply and demand methodology taught at Online Trading Academy can help you in your trading, then click that link above to register for a free class today. All right, now, if we talk about the consumption side of producer price index, and again, supply and demand drives everything, if prices start to decline, then that may actually start to increase consumption and spending. One of my old mentors used to always say, the cure for a high price is a higher price. And if you think about it, it actually makes sense. If you buy something for $10 today and next week it's $20, at a certain point you're going to go, you know what? I'll wait for it to go back down to 10. It's too expensive right now. And that's the environment that we're in. Prices have been rising rather rapidly. And I think many consumers, like myself, look at certain items that we would want and go, you know what? I'm not going to buy that right now. It's just too expensive. So if we start to see the PPI numbers decline and continue to decline, that may mean that our goods and services are going to get cheaper in the future, and therefore demand would increase, and that could be good for our markets overall. That said, there's a lot of pieces of data coming out this week with regards to inflation, central banks, interest rates, and certainly the earnings. And that, my friends, is your Monday Morning Must-Knows. We'll see you next week.